Now, if we can turn to how precious metals are reacting to all this, I mean, we have seen a downturn, which I guess is a bit surprising because it seems like precious metals should be thriving in this kind of stagflation environment. But your take?
Yeah, so I think what you're getting right now is exactly what should happen in regards to at least the gold chart, the silver chart as well, and we'll go into that in just a minute. But basically, what you had is you had this breakout on gold, right? You had this trend line here, right here, and then this secondary trend line, and right here is where you broke out. And when you broke out, it happened to coincide with the invasion of Ukraine. A run for safety occurred where you saw gold shoot up right into what a technical trader would call a double top, right? So you went into resistance. What do you get from resistance? Usually a pullback, and that's what you're doing here. So again, for me, I still think there could be a little bit more downside on gold to this 18 and a quarter-ish level, but ultimately this is a very normal check back to the breakout level. All right, so when charts break out, they tend to retrace to what we call the scene of the crime, which is right in this level. Once that happens, you should see the next leg up in gold occur where it will take out this 2075 high and really start to catapult higher. And I still think it wouldn't shock me to see 2400 gold by year end. And again, that's December 31st, would not shock me to see that. Now on silver, this is a little bit more of an interesting scenario. Silver had a breakout here, but it's come back below that level here, and it's kind of settled into where it was trading. Now you might say, well, what's the difference here? Well, the difference is that as people start worrying about a recession again, or a recession in the U.S. economy, or maybe even the global economy, we have to remember that not only does silver act as a precious metal safety trade, but it's also an industrial metal. So that's the issue here, is you've seen this pretty sharp sell-off on silver because people are now saying, wait a minute, maybe the world won't need as much silver supply because there's a slowdown in buying due to a potential global recession. So I still think silver is a no-brainer buy down here. In fact, I'm long silver at these levels down here, but I do think that explains why silver has had a much sharper pullback than gold in the near term.
It seems like with silver, as long as it does hold above that $21 level, we're probably not going to go lower, but your take on that?
Yeah, so this is a really, really important level, right around $22 on silver. If it does break that, then you have to start looking at this as your next level right here, right? So you could head down maybe as low as 19 or so. But right now, this is a definite line in the sand on silver, and you'd prefer, especially me being long, I'd prefer to see it actually hold this level and then start to make that next move up. I think the key is, time frame wise, right? So if you're an investor who's very short term, well then, yeah, there's some risk here where maybe in the short term it goes down to 19 if it breaks this level. If you're someone who's saying I'm holding my silver for 3 years, 5 years out, the money printing, as much as I think the Fed is in a box, I think that when push comes to shove, and you have unemployment starting to spike to 5, 7, 10%, 12%, 15%, eventually they're going to go back to what they know best, which is money printing. And so again, that's inflationary, especially if inflation doesn't go below 5% for many years. I think the ultimate angle of silver is higher. It's just, again, short term versus long term.
Now, you mentioned how silver is an industrial metal. For that reason, do you see it outperforming inflation? Because it seems like if we'd see a recession, that might be bearish for silver on that fundamental basis. So your perspective on that?
Yeah, so I mean, that's a great point of how if there's a lack of demand, then it's going to offset its ability to outperform inflation, which right now is 8.5% per year. So I think that is a valid near-term kind of factor. I do think ultimately, again, that you will see, I mean, we've seen silver in this long-term consolidation pattern, and you could argue that it's lagging inflation and needs to play catch up. And I do think at some point it will. Right now, the market seems to be focused on, other areas. I mean, for the most part, it was with big cap tech. Now that's starting to slip. I do think as people get more and more shy from investing in certain stocks, big cap tech and so forth, I do think they're going to start to look for the metals, and the metals will be the next big performer. So if you go back to, in fact, let me look at the chart here, and let's go back to a little bit further back in time. We'll go to the weekly chart. You had this kind of crazy move up in silver back in really it was like '09. It started at the base in '08, and then it went all the way into '09. And that's kind of what I see happening here is if we get into this kind of recessionary period, end of year, I think you bottom out on silver, and then it has this monstrous run as people start saying, okay, the recession's here. I can't be in stocks. Real estate is collapsing due to high interest rates. People can't afford houses at 5-6%, on the 30-year mortgage. And so now where do you put your money? And really, there's not many places to go. You can go in gold or you can go in another metal. And silver will take some of that absolutely as kind of a way to avoid the total inflation and just the lack of no other place to put your money.
And you've mentioned that the stock market could fall much further. Can you show us the charts of that, for example, the S&P and what you're looking for kind of on a technical level going forward?
Yeah, absolutely. So I think that's really important to kind of gauge it too, because we're still at such elevated levels due to the pricing and the liquidity that was injected into the system due to COVID. And here, if we zoom in on this chart, so here you could see this is where we are, and we're really in the scheme of things not that far off of the all-time highs. You're talking about 479, we're at 408 now, 409. So we're down about 70 points on the spiders, which again is shy of 20%. But then if you zoom out on this chart, here's your longer term trend. This is just a normal trend of expansion, right? This isn't even factoring into recession, the potential for recession. Here was your COVID collapse, and then here was the market on steroids on that all that crazy liquidity pumped into the system. So we haven't even come back into the normal growth range of the market, let alone if a recession does hit later in the year that probably pushes us maybe back to the COVID lows. So again, it's a market where at the at the very minimum, I think we're going back to like this pre-COVID high, which puts us down another, $60-$70 on the SPY. In the worst case, if you do get a recession end of year, I think we're retesting the COVID lows down at 220 on the spiders.
That would be quite a drop from where we are today.
Yeah, it would be. And you have to remember is that, the inflation issue, which, by the way, yes, a lot of it is supply chain, but it's not all supply chain. And that's going to be the issue is that you have this scenario where wages have had, I think there's a stat where it's like 1.5 jobs to 2 jobs for every one person out there that's unemployed. So there, even if everyone got employed, there's still more jobs. And what that's doing is it's causing these companies to have to pay more money, which eventually has to be passed down to the consumer, right? If you're paying all your employees double, well, you can't go out of business. You can't lose money by paying them double. So you have to raise prices for your widgets or whatever it may be. And so that is going to be passed along. That's not a supply chain issue right now versus what's going on with Russia invading or China's lockdowns. And so again, inflation is not going away for a long time. I think 5-10 years where you're going to have 4 to 5, maybe 6% continual inflation. And that's going to make it almost impossible for the Fed to come out and bail us out of the next catastrophe, right? How does the Fed come out and print another $10 trillion when we already have inflation at 5%? They probably can't do that. And then the question is, well, what do they do? And again, all right, you lower interest rates a little bit, but again, that's pushing more liquidity into the system, which will increase inflation. So there is a big issue here with there's no real major bullets that the Fed has in their gun anymore to fight the next downturn. And that's what's so scary. You don't know how bad it could get if the Fed has no way to combat the next recession.